A very warm welcome to you. My name is Pearl Naimaka.
And I'm Chiamaka Ohaochi. The program is Tax Matters.
On this episode, we will take you on an educational voyage. In the first part, you will get to experience what transpired at the FIRS Day at the 2018 Lagos International Trade Fair. And then we will move over to our guest corner where Mr. Gbojungbola of the FIRS is waiting.
The FIRS seizes every opportunity to engage with its stakeholders, and that's talking about taxpayers from across the broad spectrum of business and the professions.
One such opportunity presented itself at the 32nd edition of the Lagos International Trade Fair, organized by the Lagos Chamber of Commerce and Industry. The welcoming party consisted of top officials of the chamber, led by Mrs. Toki Mabogunje, Deputy President LCCI, and Mr. Gabriel Idahusa, Vice President and Chairman of the Trade Promotions Board, LCCI. While the FIRS team was led by Mrs. Angel Fadaunsi, Deputy Director at the FIRS, who represented the Executive Chairman.
In her welcome address, Mrs. Toki Mabogunje spoke the minds of business owners.
I was speaking to Mrs. Fadaunsi just a few moments ago, and I was saying to her, all around the world, really people don't like paying tax, and how do we improve tax compliance in Nigeria? And I expressed to her that, from my professional opinion as a business development consultant who deals with businesses, small businesses on a regular basis, that I felt that a bit more needed to be done about the understanding that people have around tax compliance and the connections that they make with it. One of the greatest concerns we have from many of our business members and the business community has a lot to do with the burden, I will call it, of taxation, and sometimes with the really small and micro businesses, what they call the multiplicity of it.
Speaking on behalf of the Executive Chairman FIRS, Mrs. Angel Fadaunsi spoke on efforts being made by the FIRS to grow tax revenue.
As an organization, we are working hard to ensure that the FIRS is in full alignment with all efforts to grow national revenues from taxation, while easing the administrative burdens inherent. We've also undertaken a number of administrative actions to further reduce the burden of taxation. The Joint Tax Board, of which the Executive Chairman of FIRS is the chair, continues to work towards simplification, harmonization, and streamlining of the processes, levies, and taxes at the state and local government level. Internally, we reviewed our administrative procedures for the operational convenience of taxpayers. If you visit our stand, which I hope you all will, you will come across flyers and materials printed in the 3 major Nigerian languages. We also have radio programs in various languages across the nation, television programs too, all in an effort to reach out and reduce the level of ignorance of the average Nigerian citizen around taxation. We have deployed several online solutions: e-stamp duty, e-receipt, e-filing, e-registration, and TCC, that's e-tax clearance certificate issuance. And the idea behind this is to make it a lot easier for you to enjoy FIRS services from the comfort of your home, your handset, your iPad, whatever device you're using.
Guests at the FIRS Day seized the opportunity to air their views and bare their minds.
One of the problems that the generality of Nigerians have is that they don't really know the difference between the FRIC and the state counterparts. For example, if you're an individual, will you be paying tax through FIRC or through the Lagos State counterpart? Also, if you do a mortgage, if a company has property and you are doing a mortgage, there has been some confusion as who to collect the stamp duties. Is it the federal or the Lagos State?
I would like to have some clarification concerning the payment of taxes for our domestic staff. Can you let us know why I have to have a house help that I'm paying minimum wage? Let me just leave it at that. Minimum wage to, and then I have to pay tax for him.
The difference between FIRS and the state boards
Revenue. So the Federal Inland Revenue Service deals with federal taxes. So companies' income tax, specifically value-added tax, some other taxes such as education tax, petroleum profit, limited liability companies, those taxes that they're supposed to pay go through FIRS. At the state level, the state deals with income tax, individuals' income taxes. So an individual, so if you're working somewhere, your taxes should be paid through the state board. So even I, as I am here now, yes, FIRS deducts my salary, but pays it through to where I'm resident, which is Lagos State. So if you have a limited liability company, your taxes typically will go through Federal Inland Revenue. If you register a business name, the tax, depending on what the type of business you're running, if you have a VATable product or service, so if you register a business name and you are selling or dealing in products or services that are that attract VAT, then you must pay VAT to FIRS, while the income tax, the personal income tax on your profits of your business are paid to the states. Then for mortgages, stamp duty. So two individuals engaging in a transaction, their stamp duties goes to the states. A limited liability company involved in that transaction should go through FIRS. Taxes, the capital gains tax on the transaction will be paid by the company. So if they made a profit on the sale of that property, the capital gains tax will go to FIRS.
Just to add that VAT is actually borne by the customer or consumer, if you like. The company, the selling company, or provider of the service only acts as collecting agent. So what it does is to collect on behalf of government and remit.
Yes, remit is the word. The company pays over what it collects to the government, and this must be done latest by the 21st day of the month following collection.
Do you provide goods and services? Then you must answer these important questions. Are you registered for VAT? Do you charge VAT on the goods and services you provide? Do you keep records of all your transactions? Do you file VAT returns? Do you remit VAT collected to government coffers? If your answer to any of these questions is no, then you are breaking the law. The law demands total compliance. Therefore, you must register for VAT. You must charge VAT on goods and services. You must file VAT returns. And you must remit all VAT collected on behalf of government within 21 days to the bank nearest to you. To do otherwise is a crime punishable everywhere in the world. VAT is prescribed by the law. Do the right thing. Collect and pay VAT. This message is from the FIRS. It pays to pay your tax.
The other question was on domestic staff. So the law places an obligation on you, an employer, to deduct taxes from your staff income and pay to the state board. For the lower end of the tax bracket, a lot of them as at now don't pay any taxes. But the concept behind it is that if you are a resident in Nigeria and enjoying the services of the federal government or the state government, you should begin to contribute towards those things. And that's the reasoning behind it. So you're asking you to pay, to deduct from the salary and remit, or ask them to go and pay so that they too can have tax cards. That is the concept behind it.
Still on stamp duty and capital gains tax.
The essence of stamp duty specifically is to save the buyer. So most times, the person doing the payment is the buyer, if you remember, for stamp duties. Now, if it's an individual, he pays to the state government. If it's a corporate body buying, he pays to the federal government. I want to clarify it that way because for individuals, his tax identification number lies with the State Board of Internal Revenue. And for that of the federal government, it has a tax identification number with FIRS. And what's the basic thing why people pay stamp duty? They say he that comes to equity must come with clean hands. Stamp duty is something that you have to do for future sake. Let's assume you buy a land or a property that you do not stamp. What is the implication? The implication is if you have an issue with that property or that landed property and you go to court, you might not get anything out of it because you did not do your due diligence by paying stamp duty to the government. Why is government coming? So if you buy a land and there's an issue, you didn't pay stamp duty, first of all, they will jettison it. The man that is selling, his own issue is actually paying what we call capital gains tax, because that is if the land he has sold requires him to pay capital gains. If he has bought it at a particular point in time and has sold it off and he had made profit from it, that's when he pay capital gains tax. But the documentation and all that goes to the individual or the corporate body doing that. So those are the people that usually go to do the stamp duty. So it's for individual, it's to the state, and it's for federal government, it's to FIRS.
There was more.
Recently, the IMF, advised the federal government to stop giving the tax waivers to some companies in order to boost the revenue base.
First and foremost, FIRS itself does not give tax waivers. Okay, there are tax waivers, some are specified in the law as incentives, and then some are granted by the Honorable Minister of Trade and Industry and Finance. Between the two ministries, they work together to do some of those things. Now, there are different reasons for giving different types of waivers, and there are always arguments for and arguments against. There are different kinds of waivers. There are waivers given to encourage businesses. There are waivers given to encourage investment. So a blanket statement to say that, oh, don't give waivers would not be, I do not know when the IMF gave that specific statement. There maybe have been a particular kind of waiver that they were advising against. And so so that's difficult for me to answer that. But most times a waiver is given to encourage a particular type of investment or for a particular reason. So you remember we had pioneer status as an incentive given to certain sectors of the country, of the business sector. So you had way back when telephones were still new, telecoms, you had pioneer status being given to those lines of business. It's not likely to come. You can't come in and say, I want to start selling mobile phones and you want pioneer status. It's no longer a new sector that you're trying to encourage. So you see, it depends on the situation at the time. You can't just say waivers are not good. There are reasons why those waivers are given, and you must take that into consideration.
Officials of the FIRS and LCCI and guests at the FIRS Day thereafter moved to the FIRS stand at the Trade Fair grounds for an inspection.
That was a good outing, if you ask me.
Yes, indeed, especially the question and answer session, very educative. And talking about education, our next segment, the Guest Corner, is on a trending topic that concerns many business operators without some of them knowing it. We are going to be discussing transfer pricing. Is your company a part of a group of companies? Do you have subsidiaries? Are you related to any company in Nigeria or overseas? Then transfer pricing concerns you. And that is why we have Mr. Bojungbola in the house. Welcome, Mr. Bojungbola.
Thank you.
For the benefit of those who don't know, what is transfer pricing?
Transfer pricing is a condition where transactions between two persons who are related, either by shareholding or by management, or one controls the other in one way or the other, where those transactions are priced such as to ensure that profits that are made in between them are equitably shared based on the activities or functions performed by each party in that transaction.
Could you illustrate with a few scenarios?
Yes, like I said previously, transfer pricing looks at transactions between two entities or two companies that are related. And for illustration, I could use this example, a father and a son. Assume a father has a house in Asokoro and wants to sell, and decides to sell to his son for, let's say, 100 million naira. And perhaps this man had gotten that house for 50 million naira. Then we could say, oh, there's a gain of 50 million naira. And under the tax law, capital gains tax at 10% is payable. But if we find out that that same house could have been sold for 200 million on the open market, then you can see that the government had lost, because the profit then will have been 150 million. And the capital gains tax payable at 10% would have been 15 million. And government will have lost 10 million because of that arrangement between the father and the son. That is one way we can illustrate and see how the country loses money when people engage in transfer mispricing.
Okay. So when did transfer pricing gain currency in Nigeria? That is, when did the tax authorities become aware of this phenomenon?
The tax authority has always been aware of the phenomena. Transfer pricing actually started in the early 60s in the United States. And we have had in our legislation provisions that will enable us to do transfer pricing all along. However, it was only in 2012 that we came around to provide the detailed guidance in the regulations that came out in 2012, and that was when we started practicing.
Please tell us the highlights of these transfer pricing regulations of 2012.
The main highlight of those regulations then were, one, mandating taxpayers who have transactions with connected persons to ensure that pricing is done at arm's length. Two, to mandate that such parties or such entities provide returns to the FRS to enable the service to take a deeper look at those transactions. And also it prescribed the type of documentation that must be maintained in order to prove that indeed those transactions have been done at arm's length. Those are the major requirements in that regulation.
What did the regulation seek to achieve?
The main objectives of the regulation are, one, to ensure that all enterprises that are working in Nigeria, that are having business in Nigeria, irrespective of whether it's a big company or a small company, are able to, they have a level playing ground such that one does not price the other one out of the market. That's one of the objectives. Another one is to ensure certainty as to how the revenue authority would treat transactions between connected persons. Number three is to also to ensure that we use it as a tool of fighting tax evasion and to ensure that government realize the revenue that it should realize from the profits of entities. Those are the major objectives of that regulation.
Okay, so did we achieve those objectives?
I believe we are achieving it.
The FIRS recently released Transfer Pricing Regulations 2018, 6 years after that of 2012. What really informed the review or revision?
First of all, tax laws are not static because business itself is dynamic, and therefore tax law must keep pace with changes in the business environment. That is number one. Number two, that informed the new regulation is that the first regulation, as at the time that the government came out with that regulation, there were certain changes that took place thereafter. For example, we have the base erosion and profit shifting project, which came up with some standard of how to treat certain transfer pricing items. These were not envisaged in the 2012 regulations. Now that standard, some standard was set in 2015, we have to reflect them in the new regulations. And also there were certain things that specifically are left out in the old regulation, which we have to bring in, and that makes the transfer pricing regime to be more certain, make it simpler for people to understand, and also to promote compliance.
What are the material differences between the regulations of 2012 and this new document?
The differences, I will take them in two ways. One is structural. Structural in the sense that in the new regulations, we have made the language a lot simpler. We have more definitions, and we have treated more issues to provide certainties. And then specifically, in terms of differences, there are issues that we have highlighted in documentation that were not in the old regulation. We have issues of penalties, administrative penalties for non-compliance, which we didn't have in the old regulation. We have issues as to resolution of disputes, which is more clearer in the new regulation, which we didn't have that much clearer in the old regulation. We have issues of enlarging the definitions of keywords, which people struggle to understand in the old regulation, which we have made a lot clearer in the new regulation. So these are the major areas of differences that we have between the 2012 regulation and the 2018 regulations.
In the 6 years since the commencement of the implementation of transfer pricing regulations in Nigeria, what gains have been made?
Tremendous gains have been made, both on the side of the government and on the side of the business community. One major gain for everyone is certainty. Certainty as to how issues are going to be treated. Before now, the taxpayers were not sure how the FRS will look at certain transactions between connected persons. Now, with having the regulations have made it clear, and what are the roles of the taxpayer, what is to be done, what kind of documentations to be provided, how audits are going to be done. All of these are made more certain in a document. And apart from that, it has also sanitized the business environment, because now the multinationals are able to do the reporting of the outcome of their businesses on a more level platform. Now, taxpayers are not able to shift profit out of Nigeria or into Nigeria from other jurisdictions, and therefore the appropriate amount of taxes are now being paid. And now when that happens, then other businesses who are not multinationals are also able to benefit, because they cannot be muzzled out of the business if the big ones are either undercutting them by prices because they are shifting profits, or either sometimes they become a monopoly because they are able to use the connections of their entities in other countries to muzzle out the small businesses. So this is a big win-win, both for the government, because then we are able to realize the appropriate amount of taxes that companies should pay, and then for the other business players, they too, they are able to compete in the marketplace. So it's a big gain, not just for the government by way of additional revenue, but also for the business community, because everybody now can play fairly.
Welcome back. On this episode, we're looking at transfer pricing, or transfer mispricing, if you like. And our guide is Mr. Matthew Bojungbola, Director, International Tax Department at the FIRS. Welcome once again, sir.
Thank you very much.
So what challenges have been faced implementing the transfer pricing regulations?
Yeah, the challenges when we started was just not limited to the Revenue Authority. It was to everyone. One of it was that it was a new topic. And when you have a new topic, everybody struggle to understand. So that became a little challenge, because we didn't have that many transfer pricing experts in Nigeria as at the time we started out. Now things have moved on. We have improved significantly in the country, both within the FRS and outside the FRS. We have a lot of people coming up, building skills and capacities in transfer pricing. Another challenge we had is the issue of what we call database for prices or for comparables. We do not have this locally, and so we have to depend on the worldwide database service providers, both for the FRS as an organization and for the taxpayers, for the purposes of agreeing what comparables should be for benchmarking prices. So it was a big problem then. And then what I also see as another problem was the additional compliance requirements that many taxpayers struggled with, which over time is turning out now. We're getting more used to the phenomenon now. Compliance is picking up. So those are the three major things.
Okay. Now, in the last 6 years, how much capacity have we developed at the level of the FRS?
In the FRS, when we started out in 2012, not many people, including myself, knew much about transfer pricing. But today, in the department, we have over 30 officers who can compete with any other transfer pricing specialist in the world. And to me, that is a quantum leap. And then, in addition to that, is the rub-off or rub-on effect on the private sector, where then there was almost not a single soul who could do transfer pricing. But now, due to the interaction with the FRS, with the officers, and then the capacity has been developed both within the service and outside the service. So I can say, yes, we have developed a great capacity, particularly from the human angle.
Interesting, very interesting. But because of time constraints, this discussion will have to move over into the next episode. Mr. Abodunbola will still be here to be a guide, and the topic will still be transfer pricing. We'll still be here, and we're sure that you'll still be here. Thank you for watching. Have a beautiful week ahead.